While considerable progress has been made over the years, it is estimated that more than 1.7 billion adults still remain without access to formal financial services. The deliberations in this session will provide insights on the importance of adoption of broader social policies that promote access to opportunities and protection from risk, support financial resilience. For this wonderful session, we have with us Mr. Sanjeev Bajaj, Chairman and Managing Director, Bajaj Finserv Limited. Mr. Michael Froman, Vice Chairman and President, Strategic Growth, MasterCard. Lord Edward Lister, Senior Advisor to Group Chairman, HSBC. Mr. Charles R. Johnston, Chair, Business at OECD and Managing Director, Global Government Affairs, Citigroup. Mr. Graham A.N. Wright, Group Managing Director, Microsafe, who will join virtually. And then we have over here Mr. J. Venkatramu, Managing Director and Chief Executive Officer, India Post Payments Bank. We welcome all the dignitaries on the dais, please. Thank you. Will humbly request Mr. Sanjeev Bajaj, Chairman and Managing Director, Bajaj Finserv Limited, to take over this session. Thank you.
Sure. Testing, testing, testing. Super. Thank you very much for your help.
Thank you and good afternoon. And like the earlier session, we've decided to make this session interactive with Q&A with the esteemed set of guests that we have over here. Let me start by warmly welcoming my fellow panel members. I co-chair the B20 Task Force on Financial Inclusion for Economic Empowerment, and the inputs from today's session would help us refine our agenda for this task force. Over the last few years, India has seen an example of transformation in the space of financial inclusion. Our central bank defines financial inclusion, and I quote from the National Strategy for Financial Inclusion for 1924, as convenient access to a basket of basic formal financial products and services that should include savings, remittances, insurance, pension, to individuals, to small and marginalized farmers, and these should be available at a reasonable cost, so as to bring them into the formal financial system with a greater reliance on technology and service delivery. This definition, I'm sure, is relevant across nations. To give some idea on the progress in financial inclusion that we as a country are making, with 550 million smartphones and 1.35 billion digital unique IDs, let me take you through a few. The financial inclusion low-cost savings accounts now have 450 million accounts, and subsidies to the low-income sections of society of about $300 billion have been delivered through these accounts. Our United Payment Interface, or UPI transactions, is doing roughly 7 to 8 billion transactions a month, more than the US, China, and Europe combined. Other enabled payment systems, or EPS, that uses the other biometric authentication does over 3.84 billion real-time successful banking transactions every month across 1.5 million standardized micro ATMs. And India Stack, a vehicle for social and financial inclusion, is solving some of our hardest financial problems in a manner that is presence-less, paperless, and cashless. We have built public infrastructure and population scale solutions based on the principles of open and free basic software, APIs, adequate privacy and interoperability. There are many examples, I'm sure, across the globe and many learnings, and I hope we will hear some of those today. And with that, let me take this opportunity to introduce my fellow panelists. Mr. Michael Froman, Vice Chairman and President, Strategic Growth for MasterCard; Lord Edward Lister, Senior Advisor to Group Chairman, HSBC; Mr. Charles Rick Johnston, Chair, Business at OECD for the BIAC and Managing Director for Global Government Affairs at Citigroup; Mr. Graham Wright, Group MD, Microsave, who is there with us virtually. Welcome, Graham. And Mr. Venkatraman Ramu, MD and CEO, IPPB. So in the interest to make this a little bit more interesting, let me start by asking Mr. Froman to speak with the following question to him. With 1.7 billion adults without access to formal financial services, what can stakeholders do to scale the adoption of technologies that help drive financial inclusion?
Well, thank you very much for having me on this panel. And as you said, there's been really tremendous progress over the last decade or so when it comes to financial inclusion. Worldwide, if you look at the World Bank Index, the world's gone from 47% to 76% having some relationship with the financial system. And India, of course, has done even better. It's gone from 37% to 77%. But with all that progress, as the chairman just said, 1.7 billion adults still remain unbanked, and even more are underbanked or underserved. Now that's access. That's how many people have access to some kind of basic account. But even more important than access, because financial inclusion is not an end in and of itself, it's a means to an end. It's a means to greater financial security and resilience. And so the challenge for all of us, even those where there's been tremendous progress, is to make sure people not only have access, but adoption, usage, and that they're making their way up that path from payments to savings, to credit, to insurance, to investments, to financial security. So at the end of the day, they have improved livelihoods. Adoption requires trust. Ultimately, people need to have trust in the network if they are to participate digitally. And what we've seen is, while there's been great progress on digitalization, the more people move their lives online, the more potentially they're subject to vulnerabilities. There's been much discussion already today of cybersecurity. We're in an arms race with cyber criminals, and they are investing in being innovative in the way that they go after networks and information. We need to be equally innovative and invest equally in making sure we can protect the data of our individuals who are participating and making sure that they have trust in the system. And that leads to the role of the private sector, because where much of that innovation is going to come from for countering fraud, countering cyber attacks, much of that is going to come from the investment and the innovation in the private sector, partnering with governments to be able to bring the best practices from around the world to payment systems, financial systems, digital economy all over the world. And that innovation, investment, and agility that the private sector has can contribute meaningfully to this process. I think when we look at financial inclusion, and we're very much looking forward to working with Mr. Bajaj on the task force on financial inclusion, on economic resilience, I think it's important to focus not only on individuals, but on the MSME sector as well, because the line between an individual as a consumer or as a household and being an MSME or being a farmer, being an agribusiness, it's a permeable line. And so we need to focus on bringing those MSMEs in. We're very focused, for example, including here in India, on Farm Pass, a way of bringing farmers into the digital economy, giving them access to markets, credit, and the like. Second issue we need to be focused on is the digital divide, both the gender divide. More women are unbanked or outside the digital ecosystem than men, but also the connectivity divide. And there's been much discussion here of India's very ambitious plans for completing the connectivity necessary for everyone to have access to the internet. And thirdly, on digital skills, moving from literacy to the skills necessary to take full advantage of the digital economy. All of that, I think, requires an ecosystem where there's a balance between innovation and risk, and where there's an open and level playing field that the government helps create, in which the private sector can fully participate and contribute as well. Thank you.
Thank you, Mr. Froman, and you've actually led us to our next question, and that's to Lord Lister. World over, there's been generally a focus more on the supply side, especially providing finance or payments to alleviate poverty. What can be done further on the supply side and also on the demand side so that we can bring hundreds of millions of small businesses, especially micro businesses, to formalize them?
Well, thank you very much. And the first thing I would say is the big challenge, I think, is the demand side rather than the supply side. I think to a large extent the supply side is looking after itself. But the demand side requires individuals and micro SMEs to understand what finance is about, to understand what they can apply for. It's an educational process, something we all have a responsibility with, so that people understand. Secondly, and this was touched upon several times today, it's about the digital platforms. It's very hard for a bank to lend money to somebody if they can't do a proper check on them. And only when they are part of a system can they start to do that. Only when one can start to see tax records, try to see get data on businesses, and that data is all important for the credit. And then the third one, and probably the most important, is the way in which we've seen the development of non-banking lending, of small banks, of NGOs, other organisations which are providing finance to particularly individuals or to micro businesses. And we can, as banks, work with them, because as they lend, we can refinance. So the banks have a crucial role in supporting all those alternative financial providers. At the end of the day, a lot of those other financial providers have feet on the street. They've got people in the village, people in the town, people who can go out there and actually strike those deals, do the due diligence, check it all out, and that's, I think, where the banks come in. Can I also just pick up a little bit on the overall theme of inclusion? And the point I would want to make is that India has made such enormous strides in getting the unbanked banked, and that has been fantastic. We now need to see that right around the world, because it's a story that is particularly bad in some of the less developed countries, where the numbers are not there in the banking system, and that needs to be corrected. Because as already been said by my colleague Mr. Froman, is that if you don't do that, all we're doing is disadvantaging people. We are making those people poorer. We're taking away from them so many opportunities. And above all, it's creating the inequality which we see, and it's particularly a problem of inequality with women, because they suffer even more than anybody else. So I would say that the most important thing is getting the banking system to reach everybody. And once we can do that, then we can deal with the supply side and the demand side.
Thank you for that, Lord Lister. My next question is to Mr. Johnson. One of the key challenges that have been identified is relating to infrastructure, which is really access to the last mile to micro business, including micro agri-businesses. How can we resolve this challenge And what should the role of governments, regulators, and businesses be?
Well, thank you, Sanjeev, and very much appreciate being invited to be on this panel. We were talking before we came on stage about some of the experiences we've all had in this area of extending finance, extending credit, and otherwise making more accessible to small and medium-sized enterprises access to the financial system. And at one point in time, I'm a recovering lawyer, and I don't know why, but I flipped from being a lawyer to being a banker, which is probably even worse. But I was working for the World Bank as a consultant, and they asked me to do a project in Uganda. And I guess the moral to this story, by the way, is about scalability. In Uganda, of course, they have a very large number of very small farmers who grow coffee trees and coffee beans. And up until the years that I started working with you, the Ugandans, these very, very small, maybe 2 to 3 to 4 coffee trees, farmers would harvest their beans, but then not really be able to sell them, or they wouldn't be able to store them properly. And the ultimate point is that here they are, they're growing this crop, and then they can't finance it, they can't monetize it. So the World Bank decided that something had to be done, and they approached me to help draft what's called a warehouse receipts system, wherein these very, very small farmers could come together, go to a warehouse, give the bags of beans to the warehouse. The warehouse would issue a receipt that receipt could be monetized by the farmer. And the warehouse, of course, would have the necessary capacity to store the beans. And by drafting this one simple law, it allowed all of these farmers to actually take advantage of a collective, you might call them cooperatives, in order to ultimately sustain themselves, finance, and grow larger crops. So I think the moral to the story is, and it's been very, very successful, the moral to the story is scalability, and ultimately small and medium-sized enterprises, yes, you've got to encourage that kind of entrepreneurship, but ultimately to gain access to the systems as they exist right now, you're going to have some form of collective effort to come together to make it make sense, make it economic sense, to have that kind of access. I wanted to point out one other thing too that we at Citibank have run into, and that in terms of access to credit. It's a problem, and I'm not sure we necessarily know the solution to it, but it involves correspondent banking. Now, Citi, as most of you know, we have probably the largest global footprint of any bank in the world. We have and provide access to capital markets all over the world. That's one of our great strengths. But when you come to countries, whether it's in India or in Indonesia, countries in Africa, of course, Latin America, there are many different banks that can reach out to the small and medium-sized enterprises in those countries. But unfortunately, in order to establish a correspondent banking relationship with Citi, which is ultimately regulated by American regulators, banking regulators, there are very severe conditions. I call them severe because from the local bank's point of view, it's just too much reporting, it's too much due diligence, it's way beyond their capacities. So the net result is that while Citi would like to extend and work with and establish a correspondent banking relationship with some of these host country banks, who then have the reach into the smaller parts of the market, it's not possible because the regulators are basically saying we have to impose these kinds of conditions in order to ensure against anti-money laundering. You have to know your client. There are all sorts of conditions. They make sense, from a legal point of view, but we're having to wrestle with this. Does one size fit all when it comes to correspondent banking requirements? And I think this is something we need to tackle. I think it's something perhaps as a B20 recommendation to the G20 countries. There's got to be more of a not a microscopic, but a more detailed analysis of what does it take in order to really extend correspondent banking so it can reach into that small and medium-sized market more effectively.
Thank you for that. My next question is to Mr. Graham Wright, virtually. Graham, I assume you can hear me? Okay. While globally, a lot of work has been done to achieve financial literacy, and many countries have succeeded now to achieve a minimal financial literacy level, we still have challenges. What can be done on capacity building to further improve level of awareness, and how can best practices be adopted to achieve simple, quick, and scalable implementation across the globe? Over to you, Graham. We have a volume issue over here.
Thank you so much indeed.
Just a moment.
Thank you for the opportunity.
Okay.
Yes, we can hear you now. Go ahead, Graham.
Great. Thanks for the opportunity and congratulations to CII and the B20 initiative for this conference. And I'm really sorry I've been unable to attend in person. Financial literacy is often presented as a solution for all the challenges of financial inclusion and indeed even for credit risk. But a recent study, Urban et al. In 2022, showed that the mean effect of financial education on knowledge is about 0.2 standard deviations, and the mean effect on behavior is only 0.1 standard deviations. Now, behavior is what matters, and a 0.1 standard deviation is pretty small. So what to do? MSCD or Microsave's work across Asia and Africa suggests 7 pointers. 1, encourage the measurement of financial literacy so that we can identify main policy priorities, target populations, and other needs. 2, understand the real need of poor and vulnerable populations for financial education so that we can build salient, relevant programs for them. 3, involve the private sector. Financial education needs to happen at what are called teachable moments, when people are looking to buy financial services to solve specific problems. So much of this can happen as product marketing, subject to appropriate consumer protection. 4, the proliferation of cash-in, cash-out agents associated with the delivery of digital financial services provides a great opportunity for us to do this. 5, strengthening the introduction of financial education in schools wherever possible. Let's start them young. The OECD guidelines for financial education in schools is a good starting point for this, but we need to be more creative to make financial education salient for kids. 6, educational entertainment, edutainment, could also play an important role. And 7, encourage systematic evaluation of these financial education programs to improve their delivery and relevance. And again, there are good evaluation tools already developed by the OECD and indeed the World Bank. 2 final points. 1, sitting poor people down on benches and lecturing them about how to save or how to budget is not going to help anyone. In fact, it is patronizing. Secondly, in this day and age, digital capability is as important and quite probably more important than financial literacy. The digital divide remains one of the most important challenges we face. We cannot afford to further bifurcate this world between those who have access to the internet and all it offers and those who do not. Indeed, smartphones may well be one of the strongest gateways to tailored and appropriate financial education. With these thoughts, I thank you again and wish you all the best for the conference.
Thank you, Graham, for those very practical pointers, and one on edutainment, I know we use gaming to train our own sales teams on complex insurance products. So I'm sure if we can do that, we can definitely expand that in the manner that you've mentioned. With that, my next question is to Venkat. Your firm delivers banking services to the remotest parts of the country. How would we adopt technology to deliver not just basic banking services, but value-added ones in a more efficient and transparent manner?
Yeah, very relevant from viability of financial inclusion. Like we all know that there's always a fear that financial inclusion is not a viable activity. So from that standpoint, obviously addition of more and more services to this financial inclusion definitely helps. But before that, I would like to touch upon the way in India it has evolved. Probably we've cracked the challenge of overcoming this challenge of financial inclusion. Thanks to various initiatives, be it from policy front in terms of opening mass accounts of Jan Dhan, or routing of DBT benefits that is completely digital identity led. All of this has actually helped us achieve financial inclusion. So what did we do? One is using the wide network of agents, the physical network of agents, and on the top of that, using a technology like a smartphone, which can be used as a device, along with an accessory like a biometric reader or a card reader, which can enable authentication and provide all the services, all the banking services. So a combination of both digital and physical network has actually helped us achieve this challenge of financial inclusion. So having said that, how do we use these rails? And we at India Post Payment Bank strongly believe that it's not just about financial services, but also how do we provide various other services which are in demand. And one such stream of services is about government-to-person services, wherein we diversified our business towards certain government-to-person services, be it delivery of Aadhaar-led services, which talks about enrollment of Aadhaar or change services for Aadhaar. And not only that, there's a lot of demand for pension-based services. There are old age pensioners who cannot step out of their house for receiving pensions. So there the postman can go and deliver these pensions right at the doorstep. And similarly, the digital life certificate, which requires every pensioner to go to a bank branch to validate his liveliness, and that is something which we were able to digitally deliver. So definitely more and more services addition will only help strengthen our bottom line. And what is important to understand is that the cost of service delivery has been optimized by whatever infrastructure that we created today. So by addition of these services, we are only going to increase our variable income, and the cost is going to be very, very less. So from that standpoint, I think it makes immense business sense in terms of diversifying our services to various service providers, and this can evolve into a universal service platform.
Thank you, Venkat. We are quickly running out of time, so let me try one or two quick questions. So one to Mike on insurance. In any country, and especially in a developing country, insurance can play a reasonably good role in covering risks, and yet we see offtakes are low. The young feel they don't need health insurance till they're older. They don't want to take home insurance. So any thoughts on what role service providers, regulators, insurtech companies can play to improve awareness and penetration so that we take this burden off the government?
Once upon a time, when I worked at Citigroup, I actually ran a small insurance business. So I never expected to be brought back into that world, but I'm delighted. Look, I think you're absolutely right. Insurance is really one of the key assets for financial security, and making it easy, whether it's crop insurance for a farmer or interruption of business insurance for a micro and small business. I know a number of insurance companies that are exploring the idea of parametric insurance, where they pay out automatically when certain conditions are met to make sure people have the support they need. You know, in the United States, it's much more cost effective to pay somebody $1,000 to drive their car out of Louisiana before a hurricane hits than to pay for the replacement of that car if they leave it there when the hurricane hits. And so finding creative ways, and again, the digital economy presents us with great opportunities to serve up both the information that people need and to target insurance at the time that they need it and be able to insure for particular events that might interrupt their financial livelihoods and their financial security. So it's a great area, probably beyond savings, one of the most important areas to help ensure financial resilience, financial security. I think the platforms are in place. Now it's really an effort of educating consumers of why it's important and making it simple for them to buy what they need when they need it to be able to weather the difficult events.
Thank you. My last question, and I'm going to open it up over here to our guests to see who wants to take a stab, and more than one could, is what role can technology and regulators play to ensure end-to-end digital experience in lending, and what are the challenges perceived by you? Would you like to take a stab, Lord Lister?
For all of us, we are all, to be cost effective, we have to use digital tools. And so it's absolutely essential that both our customers are well educated in the use of digital tools and that we have the digital tools readily available to them. Only by doing that can we operate cost-effective banking systems, and the two go together. And of course, if it's not cost-effective, then nobody's going to do it. It's as simple as that. So we have got to make sure we have the systems in place. Now, this country has done brilliantly at the platforms that was talked about this morning, and the description is tremendous. The number of people who are now banked here, and I touched on this earlier, is absolutely mind-blowing. That you could think that so many millions of people could be brought into the banking system in this way. The challenge, as I touched on it earlier, because I really do passionately believe in this, is how do we now translate that right across the world and take that message, and that I think is the key.
Thank you. Charles, any thoughts? Same question? Same question. Yeah.
If I may, I'd like to jump back on what Mike was talking about, because insurance today is so much more important given the unpredictability of events. And as he was talking, I immediately started thinking about climate change and all the impacts that that's going to be having, and how insurance is going to have to adapt to that. Because I'm imagining there's probably some uninsurable events, you know, according to policies. But I think that's an incredibly important topic as we look at the rising risk due to climate change, but also technological events, all sorts of things that need to have cover in insurance in order to maintain some sort of financial viability. I thought it was really a good point.
Fully agree with that. Venkat?
Yeah, I'd like to go with the digital lending, end-to-end digital lending. I think it's very important, and one of the critical components of financial inclusion is about credit. And the segment of customers that we deal with, especially in the last mile, for them, credit is a way to digitize. You know, probably the formal customer base, if you look at, credit first, deposit mobilization comes first, and then the credit comes later. But whereas in case of this segment of customers, the credit comes first, so that, you know, more and more digital adoption can happen. But obviously, how do we provide credit? That's the question. So which is where, you know, creating that transaction trail through cash transfers could be first step. And obviously in our country, we have taken that first step, wherein today, at least we have some sort of a footprint of getting these cash transfers through the bank account. Now, beyond that, how do we increase more services? So it could be consumption of certain digital services that create some sort of a pattern, and that can become a surrogate in providing some sort of a credit. And when it comes to the cost of service delivery, yes, I think that's already addressed with the kind of distribution network we already created in the country through cash-in, cash-out networks. And if we can strengthen the recovery mechanism, obviously the solution for the problem of credit delivery at the last mile can be there.
Thank you. And yes, Graham, over to you for quick final comments.
Thank you so much. Just to make the observation that purely digital credit can cause problems, and indeed has done so in Kenya, for example, where now 15+% of the adult population is negatively listed on the Credit Reference Bureau. You need a combination of digital and physical. And indeed, we're seeing this in India, where some of the pure digital credit lenders are struggling with recovery. So what we call at Microsave a phygital approach that combines physical with digital will be the way forward. I think pure digital for poor and vulnerable communities is a stretch at the moment. Perhaps in 2 decades or even a decade's time it may be okay, but right now it's actually causing more problems than it's solving.
That's a very good point. Thank you. And with that, we come to the end of this session. I'd like to thank our guests once again for their sharp but also quick comments. I had to push them for that. Thank you, and I bring the session to a close.
Thank you, gentlemen, for sharing insightful inputs with us, and we look forward for your participation in future. We'll request you to kindly step forward for a group photograph. Thank you. Thank you so much, gentlemen. Next session is special plenary session, Gujarat's G20 Connect. I request all the ladies and gentlemen to take up their seats for this session as well. The focus of India's G20 presidency is on sustainable and equitable growth for all in a holistic, responsible and inclusive manner. Gujarat has long been a proponent of inclusive and sustainable economic development, which is reflected in the initiatives undertaken by the state government. Be it empowering the society through financial inclusion or establishing Asia's